this difficult correction should put the housing market back into better balance.
The problem with the housing market isn't the lack of buyer demand or the fact that homes are sitting on the market a little bit longer or the fact that days on the market are up. The problem with the housing market is housing affordability. As we've seen interest rates pushed to nearly 7%, we've seen the cost to buy a home up nearly 35% in just the last year. In fact, here in the state of California, only 16% of people can actually afford the median home price. I did a video last week where I discussed this in more detail, and in fact, it's pretty shocking where the mortgage payment on the median home price here in the state of California, $833,000, putting just 5% down, is roughly $5,918. In fact, you need to make nearly $160,000 a year and have zero monthly debts in order to be able to afford that property. So housing affordability is a problem and continues to be a problem as interest rates push higher. So what's the solution for housing affordability? What makes it more affordable for more people to be able to purchase homes? Is it homes pulling back in prices, crashing if you will? Is it home prices moving sideways, allowing wages to catch up? Or is it interest rates moving back down, allowing buyers more purchasing power to be able to afford these homes? So something I often talk about is willing and able buyers. There's a lot of people willing to buy a house. In fact, my phone rings every day for people wanting to purchase homes. But because we've seen the cost to purchase a home rise so much, so substantially over the last 8 to 10 months, with interest rates more than doubling, the pool of able buyers is actually dwindling. And that's why we've seen buyer demand back off. That's why we've seen days on the market rise, because there's either less people in that buyer pool that want to purchase homes, or more realistically, it's less people actually being able to purchase those homes, which is exactly why we're likely to continue to see home sales slow. We're likely to see days on the market rise, and we're likely to see more and more people out there talking about a housing crash because housing is slowing overall.
The deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing.
But with that said, I think it's important to talk about potential solutions. What's going to change the housing market? What's going to allow more people to purchase homes? What's going to get things back on track where home sales pick up? Well, like I said, it's either got to be more inventory to the market, it's got to be interest rates coming down, it's got to be something to improve affordability. And a lot of people want to reference 2008 as, the inflection point in housing, if you will, where everything crashed. What most people seem to forget is that housing market was caused by distressed sales on top of excess inventory, neither of which we have at the moment. In fact, distressed sales make up less than 1% of the home selling on the market at the moment. And inventory back then was over 12 and a half month supply, where currently we're sitting around 3.5 month supply. Now, I know there's a lot of talk about new construction, new homes being built, and all of this inventory hitting the market at one time. Well, in all reality, it's not going to hit the market at one time. There's a portion of that new construction, as you can see from this chart here, that is finished construction. It's ready to be sold. Now, there are home buyers backing out of these contracts, as well as some of the stuff that's under construction at the moment because of the rise in rates, and there will be markets affected because of that. But there's also a portion of these homes that are being built that are currently under contract, that people are going to end up closing on those properties. So they're not properties that are going to be available to anyone out there, right? They're already sold. They're not spec homes. And then a portion of this are homes that have permits pulled that will never be built. In fact, part of the problem that we're going to have going forward with regards to a solution is the fact that home builders are going to stop building because of the recession coming, because of interest rates rising. Home builders are not going to be building homes in this market. And we started the year somewhere between 4 and 6 million homes short of what we need to serve the current growing population.
Longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again.
And as home builders stop building because of the things that we're going through, that problem is only going to get pushed further down the road. That can's going to get kicked further down the road. Now, to reference back to what I was talking about a minute ago, you're going to have these new construction properties hit the market. Now, if you're in a market that has a lot of new construction, a surplus, if you will, you go to these new construction sites and there's a ton of homes available, those markets are going to be impacted more than, say, my market here in Southern California, where very few of the homes are new construction. In fact, less than 1% of the homes selling in my market are new construction. So my market is likely to be less impacted from new construction homes coming to market than those that have a ton of it. And on top of that, all of this inventory isn't going to hit the market at one time. All of these homes are in different stages of being completed. In fact, all of these homes are in different areas across the United States. So some areas are going to be impacted more as more homes come on the market in that area, where other areas are going to be less impacted because there's less homes coming on that market. But that, at the end of the day, if it does happen, will only help housing affordability a little bit, right? It will help those that can buy homes now with interest rates being this high, those that are willing to take the risk and buy a home now. But what's the future of housing look like for those that are sitting on the market now that can't purchase a home? They're one of the 84% here in California that can't afford that median price home at $833,000. What's the solution for that person? Because that's where housing affordability is a bigger problem. In fact, we go through a recession here in the next year or so, that gap is only going to get wider between the haves and the have-nots. And it's going to make housing affordability even something that is further out of reach, in my opinion. But I'd love to know your thoughts. What are your thoughts on solving housing affordability? What has to happen? Because a crash, in my opinion, isn't likely. And at the same time, interest rates moving back to 3% or 3.5% probably isn't likely either. And even if it did, that would just create more demand in the market, putting a further strain on housing. So that's where I look at the housing market a bit confused. I've always said I would be transparent, admit when I was wrong, admit when I didn't know what I was talking about. And at the moment, I'm kind of at that point where I'm wondering how this whole thing solves itself, right? I realize that housing affordability has been a problem over the last couple of years, but I've also looked at it as there's an opportunity for those that are able to take advantage of those low interest rates and get into a home. That improves that affordability tremendously. But that's now gone because interest rates have more than doubled and home prices aren't declining. They're more or less moving sideways. And that's because a lot of people are locked into their homes. A lot of people out there are saying, well, when these sellers put their homes on the market, that's going to create this excess inventory. Well, if sellers wouldn't put their homes on the market at a 5 or 5.5% interest rate, we've actually seen inventory back off as interest rates have gone up. What makes that seller then sell that property with interest rates at 7%? Because there's a really good chance that if they have to purchase something else, that house is more expensive than the one they previously bought, and interest rates are higher. So the cost to own that home is way more expensive than the home they currently own, which means they stay put. In fact, it's more expensive to own a home today with the median home price less than just a couple of months ago and interest rates higher than it was a couple of months back with the median price higher and interest rates lower. So housing affordability has only gotten worse as the median home prices decline because of this rise in rates. So what's going to add more supply to the market? That's what I want to know. That's why I'm reaching out to you as the viewer. You guys follow different channels. You guys likely read different stuff than I do. Let me know in the comments below what you think, but don't just put, the housing market's going to crash or this is going to happen. Give me some data and don't say job layoffs are going to be the reason that the housing market crashes. We don't know that. Yeah, there will be people that put their homes on the market because they lose their jobs, but at the same time, there will also be people that lose their jobs and go out and get another job, or maybe they get 2 jobs. You have to have shelter, and most homeowners will fight to keep their home. And even if they need to sell it, most homeowners, unless they purchased in the last 6 months, have equity in their home, which means they can sell that property where it's not a distressed sale. They can sell it at market value or pretty close to it. So let me know what your thoughts are. But in the meantime, if you're wondering, housing market predictions and you want to actually see something backed by data, do me a favor and check out this video here.